trading the charts. So in the last video, we spoke about how to set up daily charts using price action trading. Today, we're going to expand on that, as well as look at some examples, as well as talk about how to trade without emotions using something called end of day trading. So with that being said, let's get it started. Okay, so with the price action that we spoke about, now again, there's many different ways you can trade price action, but again, I've always believed that the daily charts is the best because you're seeing the whole story to the market. So let's look at a market here and talk about end of day trading and why this is so powerful. Over the years, I bought many seminars and lots of different educational courses. And one instructor I had read about mentioned end of day trading and how it could be so powerful. Basically, end of day trading is you don't make trading decisions until the market is closed. I think the best time to trade is actually 6 o'clock at night. And one of the reasons for this is because, during the day trading session, or if you're a Forex trader trading like overnight and all that, there's a lot of emotions going crazy, volatility all over the place. And it could look like you have a great trade. You could be up like $300 in the morning and then up like $500 in the afternoon. And then all of a sudden, towards the end of the day, there's a reversal. And next thing you know, you're down negative $250 or something like that. And if you've never had that happen, it's not fun. So, but end of day trading is different. So basically, you make your trading decisions when the market's closed. Um, so like in the stock market, it's open till like 4 p.m. So like you could start looking at the trades at around maybe 5, 6 o'clock at night. I think that's the best time. If you're a Forex trader, same thing, and commodity trader, future trader as well. And so basically what you're doing is you're so the market's closed and then you're going to place your trade. And basically, you don't want to watch the market after you place your trade. What I do is if I make a trading decision at 6 o'clock at night, I'll place the trade and then, go on with my day, whatever, nightfall comes, go to sleep, not even worry about it. And then, either you have your stop loss in where you place it, and then you wake up in the morning, maybe I'll check it once in the morning at like 9:30 when the market opens, and then I won't watch it all day long. And that's, I believe, having, a lot of discipline to keep your emotions out of the trade. So basically you set it and forget it. So here's an example. So this is gold. All right. Did some quick analysis here using the same techniques we talked about last video. 1 year high, 1 year low, and you put your if you Fibonacci, if you didn't see the last video, definitely check that out. It'll show you how to do the Fibonacci sequence. Basically, I take this tool right here, which is called the Fibonacci retracement, and I put the 1 year high, the 1 year low, and of course the 50% level. And these other levels, once again, in between are important too, like your 38% and all the other percentages, 78% or whatever. So make sure you got the 50% in the right place, right here, actually right here. And there you go. So this is a downtrend, basically, we can see it's a downtrend because right away I could see it's a downtrend because it's making lower lows. Here's the lower low, lower low, lower low, lower low. And it's also making lower highs, as you see here. So that's how you know it's a downtrend. Let me see here. Okay, so that's a downtrend. So in a downtrend, obviously we want to be a seller, want to be a seller in a downtrend. If you're trying to trade against the trend, I mean, some people have success with it. I personally don't. I like to try and stay with the current. So let's take a look here. So here is a Fibonacci level. This one is the, yeah, okay, 50. Okay, so we got 50% level, 61, 78, 38. Okay, so here's one also, right? 23%. So that means the market. So what you're looking for is basically the best place to sell is at the trend line. When the market touches the trend line, that's the best place you can short. Um, if you are a futures trader, you could sell a futures contract. If you're a stock trader, I guess you could, short a gold stock in this example. If you're an options trader, you could buy a put, you know, all of the above. So whatever strategy you use is entirely up to you, of course, but that's the best place to sell if you're looking for technical analysis at the trend line. Is always the best place to sell. So like the trend lines here. So I would be looking for the market to retrace the trend line, and if it's a trend trade, you want it to get you're looking for rejection basically. So let's see. So we got the 50% level in. Okay, yes we do. All right, perfect. So the market, as you see it hit now. A lot of this also has to do with candlesticks are very powerful. If you're not familiar with those, I'll make some videos about those in the future. But basically, they kind of show you market psychology. So like when you see a candle like this, these are sometimes they could be called hammers, because like the market's hammering out a bottom kind of, or a bullish candle. You can call it a bullish candle. So that means that they rejected the support level, and now the market's heading back up. Now, when you see rejection, that could be also known as a shooting star. So like something like this, but you really don't want to sell this one because I mean, technically speaking, you could sell here and the market could go in your favor if you get the trade right. But let's say you sold here and it moved against you, you would have been stopped out if you had your stop loss above the candle or something like that. A better place to sell is once again either at the trend line or at rejection of the trend line. So you see here, not only do we have a trend line, but we also have a Fibonacci level right here, the 23%. And the market's starting to show signs of hesitation on this candle right here, this blue one. Okay, zoom in a little bit. And then here we actually had more rejection the second day. And again, the reason you want to wait till the end of day is because during the day, the market's going up, the market's going down, and you might think that the trend is continuing to go down immediately, but no, it's not because the market actually closed bullish the first day. But the second day here, it closed bearish, kind of closed below this Fibonacci level, which is important. But the third day, this is the place where this is probably a strong signal right here. So you can short right here because it's not only a shooting star, but it's also showing um, a double rejection of this trend line as well as this Fibonacci level here. So you enter short here, and as you see, you definitely would have had a good trade. And then again, there's a bounce. Again, I wouldn't short here, and I wouldn't short here, because again, these aren't near the trend line yet. And I think the best place to sell is when it touches the trend line. Of course, you also want to be aware of support and resistance, like these levels here. Um, because as you see, support is showing strong support right here. This could become a double bottom. If you're not familiar with that, I'll make a video about tops and bottoms. I also have some on my YouTube channel, but a double bottom you want to be aware of because that means support is showing strength. So that could mean the downtrend may be ending in the future, especially if it breaks above the trend line or this high right here. So that's pretty much what I mean by end of day trading. Another example, let's take a look at another market here. I guess we could look at this one. What is this? Okay, this is an oil market. So we can look at this one and we can analyze it, right? So we take, so end of day trading. Let's just talk about that before we do some more analysis because I don't want to make the video too long either. But basically, you're looking at this. Switch it to bars for a minute. So I'm switching the bars so I can show you. So basically, if you're not familiar with the opening and closing price of the day, like this left here, this little stick right here, this is the open. And then this one here is going to be the close. See how it's still ticking? Because of course the market's open, so it hasn't, it's obviously, but once the market closes, you'll see the price that the market closed at. And then of course you have the high up here and the low down here, which can be extended throughout the day. And now I can switch it back to the candles. So basically, if you're day trading, there's a lot of emotions running wild. But again, if you're good at it, then that's great. You're definitely one of the minority and few that are very successful at it. Um, but in my opinion, a better way is just wait for that market to open and wait for the market to close. So the way I'll trade, me personally, I'll like 7 o'clock at night, I'll start checking the charts on Sunday night, you know, and like let's say I'm gonna trade something, I don't know, a market. I'll look at my charts, I'll check the markets, I'll check I check like probably like 10 different 15 markets that I study. So I'm more of a commodity trader, currency trader, as well as futures trader. So I'll check the majority of the future markets at 7 o'clock at night on Sunday. And then if I see a trade, I'll pull the trigger Sunday night, and then I'll place my stop loss or whatever I'm doing, a call or a put or an option trade. I'll make some videos about options in the future as well, how you can trade them if you're a small account, how to build it up if you're a small account with options. And so basically, yeah, 7 o'clock at night, Sunday night, market opens. I'm checking the charts and I'll place my trade on Sunday night, and then I'll put my stop loss and I'll put my profit targets or whatever, and I'll go to bed that night and I'll check it once in the morning, Monday morning at 9:30, see how the trade's going. If it's moving in my favor, great. I'm not going to touch it. If it's moving against me, I'm not going to touch it. If I got stopped out, then I took a loss. I mean, whatever the trade, I let the market tell me when to get out, and then I won't check it again until 4 o'clock the next day, which is the market closes, stock market closes at 4. I'll wait till 6 o'clock at night, and then I'll do my trade management. Okay, am I down on this trade? Should I, then I'll make an emotional trading decision when the market's closed. Should I, cut my loss? Should I let it ride? Should I, whatever the trade plan is. And again, by doing that, you're setting yourself up for success because you're trading without emotion. You're trading when you can think clearly, when the market's closed, when everything's quiet. And in my opinion, that's going to bring you a lot of success in trading. So again, hope this video helped people who are new to end of day trading, as well as how to trade, how to find signals end of day. Again, just a summary of that. Try and stick with the trend. Look for rejection of support and resistance, as well as Fibonacci levels, and learn Japanese candlesticks. I think they're very powerful, especially the hammer and the shooting stars. Those are the ones I look for the most, and I look for those signals at support and resistance, trend line, or Fibonacci. So with that being said, if you enjoyed the video, feel free to like, subscribe, put your comments below. Look forward to seeing you guys in the next one. And as always, my friends, trade what you see on the charts. Trade well.